The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions bored of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we were sharply higher in the grain and oilseed trade on the day Monday, led by the wheat markets. Here to talk about what we are seeing to kick off the week, we welcome in our good friend John Heinberg with Total Farm Marketing. John, great to catch up with you again, and what a day for you and I to talk, because a lot of green on the screen, a lot of risk on type mentality here throughout the markets, with weather on one side, the Russia-Ukraine escalation on the other. You got Fed week as well. There's a lot to talk about in these markets, John.
Yeah, very much so. And obviously with grains, it's all about what happened in the Ukraine here over the nights, and the speculation of what could occur, bringing some risk off premium into that market, or not risk off, excuse me, some short covering into that market, pushing wheat limit higher and, holding on to that, to the gains in that September contract. So that's the volatility that's here. We've already got, and then throw in what we could be seeing for weather. I think some of that's already kind of factored in already today. We saw that with just how Sunday night traded, and until we got the Ukraine news, and that's when the market really kicked in. So it tells me that the Ukraine is probably the hotbed right now, at least in terms of the trader side of things. And those markets being short corn, being short wheat here, are probably getting kind of nervous that something could escalate even further. That could really maybe bog down some of the shipping concerns in that Black Sea region.
Yeah, talk about Russia attacking Danube River ports now and everything else. So really, really hampering Ukraine's ability to get grain out, it sounds like. And, I see that along with, I know we have a spring wheat tour going on this week in North Dakota, and that could show us how good or how bad some of the spring wheat crop looks. And I just think you add in that along with here with the Ukraine situation, a lot of supply concerns in wheat, and of course then wheat just adding into corn, as you mentioned, and soybeans too, and kind of lifting lifting everything higher, so to speak. All tides raising the boats here, John.
Very much so. You go look at too, also just the technical side of the wheat market here today. Really impressive close. Obviously finishing 60 higher on the Chicago September, but we got it back above the 200-day moving average. We haven't been there since the first part of November. So it just kind of shows you that technical trend that could be flipping over a little bit here. Key tomorrow will be follow through. Okay, do the shorts really step to the sidelines, or do they just use this as an opportunity to reestablish their position given the global wheat price levels and things of that nature? But I thought that was a pretty important close. Last week we challenged that 200-day twice. We failed at it. Today we got ourselves through it, held those gains over through the end of the day. Does that signal a push to the $8 mark? That might be a possibility. You go look at that. I do think we need to keep the news cycle hot. We need to see more things continuing to occur, and the market doesn't get tired of, just lack of news. Again, you always got to have something to feed the bull. But this wheat market right now, with its short position, with other things going on globally too, we don't talk much about that rice ban from India. That just puts wheat a little bit more in the hot seat in terms of demand, as well as to what is just going on in terms of the weather across the country. You talked about the spring wheat crop. We got some moisture affecting some of the winter wheat crop areas too with harvest. Canadian prairies still continue dry. We can just kind of keep listing things on and on. Maybe it's a window here where the funds just say, hey, I'm tired of being short the wheat market, and that enough can move both these markets, corn and wheat, together.
Well, talking a little more on corn, I have to think that this is an opportunity for folks to get some floors locked in here if they've missed out on some of the other rallies this year, because just with how thin some of this trade can be in this window, John, as we know, the old adage, stair step up, elevator down. I mean, I have to think that the bottom could fall out of corn if weather improves. We don't get that many days of 100-degree temps. If
things settle down in the Black Sea, whatever the case may be, uh, corn market, this could fall apart here pretty quickly, I'd have to think, John.
We still got to keep an eye on the fundamentals. Money flow is one thing, and that's maybe what we're seeing here today. Technical buying, short covering, just triggered by that wheat rally. Like we talked about the 200-day moving average, that's just right over top us here, about 574, 575 on December corn. That's always a big swing point. If we get through there with some momentum, maybe we go back to the top trend line. That is around 620. It wouldn't shock me if that happens on some money flow and continued strength in the other markets. That's going to be a big key here. The biggest thing we talk about the weather, though, we got this hot temperature forecast. It sounds like it's coming. Producers are concerned about it. It's going to do some damage to the crop. Again, we'll have to see how much that materializes. I think already today, you saw a fairly good open. Prices kind of faded as we started looking at the longer range models. Again, we're looking at things getting cooler. I know for us, like this week alone here, I know we're in the Milwaukee area, so we're not the heart of the Corn Belt, but we're talking mid 90s on Thursday, and by Sunday we're barely going to break 80 degrees. With the temperature change. So, I think the market started piecing that in a little bit too. Obviously, we need moisture to go with it. We seem to keep missing that overall. But again, if we get through these hot temperatures and they don't stay prolonged, the market's going to still focus on the potential that's out there. Again, you just go look at the balance sheet, and again, the demand that's in this market is still very, very heavy. The USDA could easily bring this yield down 2, 3, 4 bushels an acre. I think this market's already thinking about a 174 type national yield and make some demand adjustments and still keep us well over 2 billion bushels. We'll talk about the livestock sector in a moment, but you're looking at a beef cow herd that's at its smallest total of basically since on record 1971. That's just numbers of feed usage that's not there. The animal numbers out there, and here's the USDA bumping a couple, 100 plus million bushels of feed demand in next year. So those are all those variables I see. I keep a look at, and at the same time too, we've got this Brazil crop coming at us. Big weekend of harvest as weather was friendly down there. I think that's what limited us last week. Was all of a sudden we heard premiums were falling apart in Brazil. In other words, what the value to the export market was, and it just keeps us uncompetitive. And we still got to move corn bushels here, and we're still not seeing that overall.
How about soybeans here, John? Obviously, soybeans moving higher with corn and wheat on Monday to start the week. Some different fundamentals at play with beans, though. A tighter balance sheet. August is more of a weather month for beans, although this is definitely impacting the hot temperatures right now. I mean, what's your take of this soy complex overall? Just the reaction we saw on Monday. Is this more just following corn and wheat, do you think, to the upside, or are there some other fundamentals at play, John?
Actually, I think this was following soybean oil today. We were up $2 plus a pound on soybean oil. You had a strong move in crude oil, $78 a barrel. That's been tied together. Plus, again, that Black Sea region, sunflower oil is a major export crop out of that area. That affects that edible oil market. Therefore, we just saw that move as, soybean oil in terms of these front months broke to new highs through some of the fall values, not old time, record or contract highs. Those are still a little further down the road, but we're in a window. Maybe we go up and challenge those another $3, $4 higher. So I think the move in soybeans today was pretty much tied to that oil market overall. It was nice to see a little demand news this morning. China picking up 120,000 tons of beans. We haven't seen any of those sales for a while. We need to get some business going there. So maybe that's the beginning of something. We'll have to watch. But again, that was the tie. I think it still runs a little bit separately than it does from corn and wheat in terms of what happens in the Ukraine regarding that overall. But you just got two different markets. I mean, just look at soybeans. They're reflecting the tight supply picture. The market too, with this hotter weather, pricing at a lower yield, lower carryout. If you notice, we don't have carry in the market. We have an inverted market in beans. The money's in the front end, looking for beans early. Then we got a premium over the back end where corn still has some carry in the market, 15, 16 cents from the December to the July contract. So again, that's just the market's way of looking at it too, saying, hey, we're going to have plenty of corn. We're getting a little lift right now. Beans might be tight. We want to make sure we get those supplies secured.
Real quick, if I'm a farmer looking at making some moves, locking in a floor here, corn, beans, wheat, etc. Obviously, it's a bit of a double-edged sword. If you're really concerned about production this year and not sure what you have for a crop, I know that's got to be on the back of some folks' minds, but I have to feel like at this point in the growing season, there's at least some sort of opportunity to lock in a little bit of this profit right now, John.
And I think you have to. If you feel comfortable about your bushels right now, here comes a third opportunity now to get some things marketed for both corn, for definitely corn. Soybeans have provided some pretty decent opportunities overall, except for the pushback here a few months ago. But here we are again, opportunity to get some good value in, more likely a $5 plus cash sale. Then you come back and re-own this down the road, or go ahead and put the call out there now, or call spreads out there now. I have a hard time diving into calls when we're up 80 cents on, off the low here. But at the same time frame, it's still an opportunity to either get puts underneath, move puts tighter if you have existing puts in, or get some sales on the books if you feel comfortable enough doing that here, and then work on building that average a little bit further down the road. Soybeans probably looks a little bit more friendly. But again, we're talking most guys today, $13 plus cash beans. And if you're behind on sales or just even starting, it's a pretty good starting point. Considering even last year we were less than that. And, for some of these guys in their first sales, obviously there's still a lot of volatility. But again, do not forget about that South American crop. Corn and beans will have a long tail. That will be a limiting factor over both of these. If all of a sudden the volatility settles down, the news front settles down, we're going to come right back to the prices of, on the export scale, and the U.S. market is still just not competitive in the whole big picture of schemes.
We are talking today with John Heinberg from Total Farm Marketing. John, let's go over to the livestock trade. You mentioned this earlier, cattle market, cattle on feed report, cattle inventory report from Friday, some reaction from the cattle side. I have to think, though, too, sharply higher grain probably didn't help cattle much on Monday. But what's your take on just the market overall and some of those numbers that we got from USDA back on Friday afternoon?
Yeah, first off, we got the cattle on feed numbers pretty much in line with expectations, with the exception of that placement number being heavy. Now, that's probably a combination of the two different things. This is 2 months in a row we got heavier placements, but we've also had lower corn prices, still got concerns on weather. Feedlots got room. Let's get those cattle moving in there. Since we could lock in some inputs a little bit cheaper, get them off the pastures that may be questionable in some of the Western plains. In that regard. So that's some of the reason we saw the placement number where it is. I'm going to move off of that. Let's go to those cattle inventory numbers, which a lot of people didn't talk about. That was the focus. It was more of the cattle on feed. Just go through and look at the breakdown. First off, we talked about beef cows, lowest number since 71. Right with that, available feeders, lowest number since 2014. In terms of feeder cattle supplies. Calf crop, lowest number since 2014. If you go look at the prices today, this trend is not going anywhere. And sure enough, here comes June 24, April 24, October 24, all trading nearly $1 higher today, reversing off the early session weakness. Again, just saying that this cattle market issue in terms of low supply is not going anywhere fast. It's not hogs, it's not poultry where multiple months later, we got our numbers back. It's going to take time. And if corn prices continue to kind of kick in here, that's only going to prevent that from happening. So staying bullish the cattle market longer term. Short term, we'll see if we get some correction. I got some price movement that I don't like the last couple of days. Reversal last week, little follow through today. Even though cash trade was higher, might be just a window we see some money come off the table a little bit here. But to me, again, might just turn into an opportunity to stay long this market in a longer window. Still been holding a $200 plus target on April 24. We're getting closer at 191.50 today. So that $200 level is not that far away. And that might be a window we definitely want to keep those puts underneath, keep your top side open, but make sure you're building a floor that's historically great.
It sounds like more, we've been talking, and a lot of us have been very bullish this cattle market for quite some time, but it's sounding like, more fourth quarter of the year into the first quarter of next year is when we could really start to see some of this kick in here, John.
Yeah, we could see that again on the number supplies, and that's where we're going to still have to kind of keep an eye on things. And there's some very good value out there at this time frame, and I still think there's some room for it to go higher. One thing we keep talking about and watching: do we see the heifers move out of that feeder cattle pile and go into the breeding herd pile? That's going to be depicted on weather. It's going to be depicted on corn prices, things of that nature too. That could tighten up that available feeder supply even more. So so I think a correction in here. We're probably a little tired in the markets. You got some reversals on the charts right at this time frame technically, but that might turn us into an opportunity. Boy, if this thing would pull back $4, $5, $6, or feeders $6 or $7, $8, might be an opportunity to make sure you put some positions in to kind of protect your upside, maybe get some supplies taken care of. But just look where your risks are here. Take advantage of them, because again, we're a headline or two away from things really changing.
John, how about the hog market? Any thoughts that you see there in that side of the proteins?
I think we just got some profit taking off the corn move today. I look at those August hogs, back above the $100 mark. But again, retail values, the cash market's still very, very supportive. I mean, you still look at the fact that, today lean hog index up 44 cents, trading at 104. August is at $1. So we've got some premium in the index over the future. So that should keep this market supported in that window. And that premium now carries all the way out through the entire marketplace. And it just felt like months ago we were wondering if we could ever, keep the premium of the futures over the cash in place. Now it's the other way around. So that keeps me supportive of this hog market. As long as the demand is staying in there right now, carcasses trading around that 103 level is supportive and providing enough meat on the bone for the packer to keep hitting up. Today felt like I said, a profit-taking day, just with the volatility in the cattle market and that run in the grains.
John, before we let you go, floor is yours. Any final thoughts you have for us on the show today?
We got a couple other things going on this week. Obviously, the Fed meeting, as you mentioned, that's coming out. We expect that quarter-point hike. Stock market's been on a heck of a run right now. I think the key is going to be not so much what they do, but what they say. Is going to be our pause here on the interest rate hikes. I think the market's kind of thinking that in terms of the equity markets. You got a good movement in crude. Obviously, the hot weather forecast right now, thinking possible more energy demand. Supplies are kind of tight anyway, and that's given us that push in the crude oil market. It's felt like now for a couple of weeks here, especially since the dollar kind of broke last week or 2 weeks ago, that we've seen some money flow come into the risk assets, whether it's the grains, livestock, stock, equity markets, or energy markets. Just feels like there's a little bit of optimism here as we move into the second half of the summer.
John, if folks want to reach out to you, get some advice there on the marketing plan at Total Farm Marketing, what's the best way to reach you?
Sure, I'd love to reach out to them anytime. Give me a call, 800-334-9779. Shoot me an email, jonh@totalfarmmarketing.com. That website of ours also, totalfarmmarketing.com. Feel free to give me a call. Love to chat with you. It's busy times as always. Everybody's constantly got something going on, but keep an eye on the risk side of things. Things are going to be quick and volatile, and they're going to move extremely fast, as we've seen just a few weeks ago.
I'll give you a pass on that hiccup at the end. You were off the show a couple weeks, so you're a little rusty, right? No,
yeah, it's not quite working today. It's been pretty busy today.
John Heinberg, Total Farm Marketing. Always great to talk with you, my friend. Thanks for joining us today. We'll talk to you next week.
Sounds great. Have a good week.
That's going to do it for the show today. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.